Hello everyone, welcome to our explanation of the homework problem for equity changes. Jumping right in, we have our journal entry for an unrealized loss. We had it already net of tax, so we don't have to worry about the taxes on that one. Going down to the stock options, because there was 60 million, we're going to do everything in millions because that's how everything is presented on this these financial statements that we're working with. 60 times 5, we use the fair value of the options whenever we're calculating the compensation expense. And then because 20% has been forfeited because people left, we're going to multiply by 8.8 to get 240 million total value or total compensation is going to be earned. They earn it over 3 years, and those 3 years are now at the end of the year we're worried about, the end of 2015, has all been earned. 3 years is over. So while there's 160 recorded already, 240 needs to be recorded. So we just record the difference, the 80 compensation expense and additional paid in capital. When we buy treasury stock, simple journal entry, treasury stock and cash, we would have done that on February 1st and September 1st, exactly the same entry. For making the journal entry, you do not care how many shares were purchased, but we will need to know that information later on. Then when we sell this treasury stock to those who exercise their options, the employees, they give us 400 million shares. We made that quite a lot. So 50,000 million, which is 50, then credit treasury stock and credit additional paid in capital. Remember, you credit it for what we originally paid, which I gave to you, so you didn't need to look that up or anything. Difference goes in additional paid in capital, which this company really doesn't use. They put everything in common stock. They don't separate paid in capital from common stock. So then to do the dividends, we only going to pay dividends on shares outstanding. We need to stop, calculate how many shares are outstanding on that day, and that is 4201 was what we started with, and that is the shares issued minus the shares in the treasury. And then we have these changes. We're going to increase it, shares outstanding, by the 400 million here, and then subtract the 2 treasury purchases that we're going to make during the year, because we don't really care when they happened at this point. We just need to know where we're at on December 1st when we do a stock split, counted for as a stock dividend. Now, if you used a kind of a $1 or something for par to make the journal entry, technically there would have been no entry because they do not have a par value on their stock. But if you created one, and some companies do that, was what's called a stated value, you could have debited retained earnings and credited common stock additional paid in capital for 4504 if you make a journal entry, but you also could have been correct with no journal entry. That means our shares outstanding is double what we were because of the stocks split, and we multiply that by the amount was given for the dividend, $2.25 a share, which is incorrect on my spreadsheet. And there we go. We'll fix that. And you debit retained earnings, credit cash. So your statement of changes in stockholders' equity should have the columns as shown here. See if we can get it all in our view at once. Common stock retained earnings are, they use a different terminology. What was the terminology? Earnings reinvested, which is their choice, but that's the same thing. AOCI and treasury stock. We have the unrealized loss. We have the earned stock compensation. We have the purchase of treasury stock, which affects the treasury stock column. We have the affect common stock for treasury stock issued for stock options, and also treasury stock. So you subtract the 16, or make it go more negative, you will, and then it goes the other way on the 42. Net income goes here, dividends reduces it, and you got your ending balances that come down to your equity section of the balance sheet. It's numbers exactly just come down, and then I put what you would have for your different descriptions. Now, technically, we went over our authorized shares, and here when we did the stock split, but if you were concerned about that, that's fine, but we'll let that slide for now. And let's see. This I gave you that how it would calculate out. You wouldn't put all this information in real life. You would just put the total shares there that were in the treasury. And then to calculate basic earnings per share, I showed a little different way than we did in class, and is usually in that I did every month. I don't just do this because for some folks that this may be easier to see. Each month we just list our whole months to make sure we don't forget anything, and how many shares are outstanding at the end of each month. So we start with 4201, nothing changes. Then there's a purchase of treasury stock in February, and it stays the same. So it goes down with the purchase of treasury stock, stays the same till July, when the new shares are issued to those exercising their options. Goes up by 400, and it stays the same until September, when more treasury stock is purchased, all the way through December. We then just add them up and divide by 12, because you've got 12 numbers to get your weighted average, which was 43.42. Now, the thing about a stock split at the end of the year, doesn't matter when it's done, it is treated as if it happened all year, right at the beginning of the year. So all we do is take the weighted average and multiply by 2 for the stock split to get 86.84. And our earnings per share basic is the net income that was given to you divided by that weighted average shares after you multiply by 2. $1.80. So that is how you do that homework problem.